E from marketwizards.com and Eminiwizard.com. Running traders use risk capital you can afford to lose. It's just after 11 o'clock on the 21st of February 19. Looking at a couple of charts, just trying to put the confluence of 2 or 3 ideas together. We still need to bust all over again yesterday's low and stay under it. Some people teach the idea of a beach ball, trying to push a beach ball underwater and it pops up. I think that's a great analogy. Once you get it under, you've got to keep it under there. We've had about 15 bars really tight, consolidating. And then we get a bounce, and we have again suggested to make sure you are paid by this 77 to 78 area if you're long side. Just an odds idea. And the reason for that partially comes from the 5-minute chart, because now we're starting to bump into that blue line exerting itself. And this, once we get this pattern started, whack-a-mole, you need another driver to come back and knock out all of this. Got to get under this for continuation. And because this blue line had started up here so much higher than the pink line, it makes it harder to do that. And that's why when you get to T2, that 68.75, you want to make sure you're paid, because you start to run out of, normally traders are going to take profits there and just say, you know what, that's a good run. Think about it. It's about a 30-point trade off the highs of the day. Doesn't look like much right here, but when you look at, the the range from the day, it's substantial. And this blue line said the same thing. Well, first time back, maybe you should get paid. So this is typically what happens with an umbrella trade. You get a sharp sell and it goes vertical, just plunges like a knife. And one of the best sayings I ever heard about this is let the, it's like a knife being thrown into the floor. Let it quiver a little before you buy. Let it shake back and forth a bit. And then if you want to buy it, think about buying it against the grain. But you can see the difference in pattern from 70 to 75, from 76 to even back here at the 82s. This is all fast. And then we get well, maybe we're there. And then I'm looking over here and I'm saying, well, maybe. But knowing the target, 68.75, helps a lot. Because even if you don't want to buy, at least it tells you, you know what, the high odds trade is done. And it is one of the hardest businesses you're ever going to try to master. I don't know that anybody ever really does. Because we're fighting ourselves all the time. We're trying to keep our fears at bay. We're trying to keep our greed at bay. I don't even have TV on right now. I don't know what's being said. Now and then I'll put it on, perhaps out of boredom, but I have no clue other than just reading the tape. I don't look at other traders' ideas, really. Now and then I'll take a peek if, I'm out of a trade, I'm sitting sidelines and saying, all right, let's see what other guys are saying. I have no clue what people are calling for because their methods are different from mine. The things they're looking at are different. A lot of them are using this type of a chart. Well, guess what? I've tried this the last few weeks. I don't know. It gives me a huge advantage, but I'm trying to learn. Okay, so 72 must be important. I already know that. I already know that 72 to 73 is an important zone. I'm looking over here at this bar right here, saying, all right, you got to get below that and keep it there. That's an angel. You got to get it. below that. That's the weekly angel right now. You got to get it below that. So that's helpful. 83. Okay, that shows up. Good. That's very helpful. I like that. But wait a minute. 83 and a quarter. We said that was our flipper day. We already knew that. At the beginning of the day, we knew that. So this is predictive, and it's not reactive. This would tend to be, I think, more reactive because it kind of prints it maybe after the fact. So for me, that's a very what I'm trying to learn, and I'm not trying to be stubborn about that. I already know the 68.5 area, very important on this chart. Deep support. Now this is a throwback line, so make sure you understand the importance of throwback lines, okay? Typically, you got to get it back up above that, or that's still a resistance line when it comes back to it. This was a neckline that broke, and I would call it a throwback line if the market bounces back up towards it. And we can get above it, but usually first time back, it will start to respect that area. So anybody that is long side, you should have profits from the short side if you're trying a bounce trade. And I think it's still going to take a little time to get out of Dodge personally, but that's just me. And I think you got to beat that 77, 78 area right here. I know everybody wants their 10 points, but a lot of times it'll abort just before it. And that 78 shows up here. Got a 2-box move basically. And the low may be in for now. But I still think we need some consolidation and rotations.